Hey, good day, everybody. Still here, Daily Market Pulse. It's Wednesday, February 26th. So a little bit higher. The markets did go higher, then they sold off a little bit. Small caps actually performed quite nicely today. We'll take a look at that as well. But mixed volume today, so nothing earth-shattering in terms of high volume. But again, markets can go up in lower volume many times, so that's possible. So we'll take a look at things a little closer. So once again, we're seeing the Dow just hovering right at the pivot area, 16.2, right above a flat, almost rising 50, rising 8, about to cross over perhaps. The 20 is starting to rise up again. So certainly the trend is starting to strengthen. Question is, will they push it through? Will that allow it and give it that extra kind of shove to get through there? Otherwise, it starts to fail back below the 50, back toward the 20. So it's kind of odd. Upper shadow on Monday, and then we had the spinning top yesterday, and then another one today. So a little bit of indecision here as you sort of teeter right on this level. And the S&P is really no different. We've been talking about our targets above and below, so nothing's really changed. There's your channel. There's your trends. The 8 above the rising 50 now and the rising 20 as well. So they're not stacked correctly, but still they're all rising. And then you've got that upper shadow Monday, spinning top once again here as well. Dow Jones and S&P identical, but this one right at the 1850 area and just can't seem to get through. On the other hand, you look at the NASDAQ, and here once again, the NASDAQ spinning top, mind you, but it's at a higher level. It's near 4,300 at least. It's above the pivot area. It's above the 8 moving average, of course, like everything else. But they've just kind of tapered off a little bit. And so my thought would be, of course, everything sort of is just kind of consolidating, and the timing of this will all come around along with the Yellen speech, which is tomorrow on Thursday. Probably, that's sometimes you see these coincidences out there. So I'm assuming this is what's going to happen. It's going to consolidate after a nice run up and a breakout, and then of course on the S&P and Dow they may be looking for something for the breakout, and it just happens again to be a catalyst that coincides with that breakout. So we'll see how that works. So that's the NASDAQ. Nothing's changed there. Let's look at the TSX. Okay, TSX, we saw shooting star bearish engulfing yesterday. Now we've got a little doji. So looked at those three sell signals at this level and thought, okay, it's going to pull back at least the 8 moving average, and more likely maybe closer to 14,000, which is the round number figure, which is also where the high of the former high was before the breakout that occurred on the 14th of February. So that's very likely. Plus, you see price action kind of tapering now, consolidating as the 8. The 8, yes, but the 20 more so is allowed to catch up a little bit. So this could just kind of flag a little bit. It could even drop a little more aggressively before a potential support level is found and then bouncing. So watch for the 8 as well as maybe the 14,000 area as potential support. I doubt it comes down to the 20 unless the 20 is provided enough time to catch up to about the 14,000 level. So that's what we're seeing on the TSX so far. If we look at the DAX, kind of the same thing here, just hovering, right? We got what appeared to be a minor kind of hybrid hanging man across right where the spinning tops and doji were. We had definitely a hanging man yesterday, and then we got a bearish engulfing today. All again at levels where that they just can't seem to get through. 9,800 is the highest level. The blue line you can see below there is where the support is, along with the 8 moving average. So it's holding. So as long as it holds while you have a rising 20 and rising 50, they're looking for a reason to go higher. And I gotta think that even if there's some selling, we don't have enough distribution days. We don't have enough of just stuff going on that would warrant a correction this quick and this early. That even if there's a drop, we're looking for rebounds everywhere. So still looking for kind of a breakout, I think, overall as a theme. Let's look at the currency. U.S. dollar, Canadian dollar bouncing. I had a little bit of a bounce yesterday off the 8 and 20. It's bounced a little higher today. So look, as I said, it looked to me like this has every opportunity, even though there's some sell signals with the shooting star and the bear sash, that after a very aggressive bullish candle, that this is more of a consolidation, more of a profit taking, and then we're looking for another attempt at least to come back toward 112, 112.25, and I think that's what's happening now. The euro, on the other hand, was consolidating multiple confused candles across the 137 area, and they could still come back down and test 137 to 136.5, down to the 50 and 20-day moving average, including the trend line, which had not yet really tested. So this trend line right here was coming down. They broke out. They never came and tested it right away to sort of catapult off it. Now they have bearish engulfing today, coming into that 50-day and 20-day moving average, and as well as the trend line. That'll be a triple support. I would strongly believe that will hold, and you will see a bounce back up again to retest the highs of around 137.50 to 137.75. So look for that going forward. Okay, Treasuries. After yesterday, I thought, okay, that nice move into making a new kind of a new high, certainly a higher close, particularly above 133, would warrant again a push into 134 and then ultimately likely 135, and they pretty much proved that today. The 8 moving average now crossing above a rising 20, so now everything, the short term with the intermediate, strengthens even more evidence that this is going higher. You can see the gap higher already after hours trading, and it's just kind of sitting there. Right at 134 right now with that little red candle, but it's actually still a positive close currently, positive action on the Treasury. I still expect that. Even if there's any kind of a dip, still looking for a move into 135 and testing that dark cloud cover high right there. Japanese yen sideways. Boy, look at that thing. Just the lows are just going there, and you have a kind of a top side that's actually to some degree coming down, like this, right? I mean, this is kind of coming like this. So you have a descending triangle currently developing, but it's in a flat 50, a kind of a rising or almost flat 20 and a flat 8 moving average now. So this thing is just wedged looking for something. And I mean, originally I would have thought just like the Treasuries, this was going higher, but I mean, right now but the only thing that would tell me that, of course, as I said, the flat 50 has now allowed this to calm down and give it a chance to scoop back up. And I say scoop, I literally do mean scoop, like, scoop back up this way. So you got a flat 50, everything's kind of converged in here, and then you've got a divergence right here. So while this is going sideways, this is going up. So gives me again the inclination this is coming up into this area right here. So that's quite a mess there. It looks like Mr. Dress Up in Canada, all this drawing. So there we go. That's it right there. So that's what I think is happening. Otherwise, you're looking to drop into the 50 and possibly lower. But there's still a sense of bias still to the upside. But we'll see. We'll see. Okay, gold after a huge run up, a little bit of a pause here, right? So the target still remains 1360. It had a pause at 1320, which was the original target. It went higher, has come back to retest 1320 from the top side down. Fully expected. It's the 8 moving average as well. I fully expect this will hold and go higher. The 200 is still declining, but that will eventually flatten. The 20 is coming fast approaching, and the 50 is still declining. I mean, not declining, but lagging, I should say. So this is allowing the 20 and particularly and somewhat the 50 to catch up a little bit. So still looking for 1360 to be the target. Thereafter, hard to say because the 20 will be smack into the 200. The 200 at some point needs to start turning up, so we'll see what happens once they get to 1360. We'll be looking for sell signals. We'll be looking for possible breakouts and thereafter. But right now, looking for support at 1320, then eventual target at 1360. If it breaks below 1320, watch for the 200 and or the 20-day moving average for support. Silver is lagging gold once again. So gold we knew had broken out of its original target, its original measured move, and this was, at $22 was in fact silver's measured move level, and continues to hover right at or below it. Doji formation today, so a little indecision, confusion perhaps, profit taking perhaps. It did not make a new high with that doji, so not near as ominous, but still you've got a hanging man, two spinning tops, somewhat of a spinning top high wave yesterday and a doji today, all at this level. So it's usually not a great sign, but all the series of lows overall, as you can see, are all rising for the most part. Everything seems to be coming up this way, kind of driving and pushing higher. So the pattern overall dictates higher. It doesn't mean it can't go lower. At one point, you can see that candle today was in fact red. It opened lower. It went lower. Didn't make a new low, however, but it went lower. So that was solid red at one point and then reversed. So the buyers are there. They're looking to get in. They were shaking a few out, thinking that this might be resistance likely, dropping prices. People were exiting as a result, taking profits and or just completely exiting. The shares that were available are now scooped up. I don't know how long they're going to stay here, but everything, to me at least, everything still says higher. It's a question of what are they going to do before they go higher. That's always the million dollar question. And again, the 8 moving average is right there to drive the short-term trend higher into 23. The 20 and 50 were lagging quite a bit, haven't quite crossed 2050 yet, but this consolidation for the last 5 days has allowed, if you can imagine, take a look at where the 20 was before. When prices got into the target here, the 20 was here. Now you're here, and look at where it is now. It's quite a bit higher. See, over here it was below 20. Now you're fast approaching 2050. So 50 cents higher already in just the last 5 days, and it allowed it to get closer. It still has a lot of air, unfortunately, to that point, but at least it's closer to helping it go to 23. We'll see if that's the case. So let's see what we have next. Okay, crude today continually sideways. It dropped yesterday, came back up with a little bit of a green candle today, back into the 103 resistance and going sideways. So with this again, multiple days sideways here after reaching the 103 goal, 103 target. The 20 is about to cross over the 200. The 50 is still lagging but still rising. That's fine. Still looking for this, just like we just talked about gold and silver, to go higher ultimately. In this case, 105, 108, 110 are the ultimate targets, I believe, on the upside. In that order. If it does pull back, you're looking at 101 like it did maybe yesterday. It did already that, came back and tagged that 101 area pretty hard, but it did close above the 8 moving average. So the 8 moving average right now holding, everything still kind of driving to the upside, it appears. It's a matter of how and when once again. Let's take a look at let's take a look at the small caps. Okay, small caps. We talked about the Dow earlier in the S&P right at that resistance level and just kind of struggling to get through. And it was through at one point. You can see that upper shadow. It was actually up there. It was able and capable of closing up there. That probably would have been kind of constituting an actual breakout. It was probably enough of a move, percentage-wise, dollar amount-wise, to say, yeah, that's a breakout. The Bollinger Bands are opening, so the avenue, the roadway is open to go. They could not close it above the resistance, so they remain at this level, 117.35 or so here, right at that pivot area. It's green. There's no sell candles, mind you. Yesterday was a little suspicious just because of the doji, but today they managed. But again, every day is a new day. So right now I'd say resistance with immediate support at 116. 8 moving average is fast approaching. The 50 is still rising. The 20 is now rising as well. So again, short term, but certainly even the intermediate trends are strengthening, giving it an opportunity to plow through, but again, still hasn't. So how and when is once again the questions of the day. And finally, the VIX. The VIX, we had said, could come into this window and find support there, and sure enough, it did. It bounced with a higher open today, bull sash formation, where the open is higher than yesterday's close, closed higher than yesterday's open. Did not make a new high, however, but that high slammed right into the old window, that red shaded area you see there, as well as where the 8, as well as the 50-day moving average currently reside. 20 is starting to turn over a little bit to the downside, so this is still kind of jammed in a very tight zone. It's essentially where the window is below 1350 and immediately above it's 1450 if you want to call it that kind of a tight window. 1350, so $1, right? And then what? Is this strong enough to say it's going to go through and higher? The markets are at resistance. This appears to be slammed in a little range, but certainly at support. Don't know. If it falls through 13, then you're going back to 12, 1150-ish. If it goes through 15, then you're probably going to 17 almost immediately, which means the markets are coming off those highs and dropping reasonably precipitously, we'll say it that way. So we'll see how that goes. So that's your market pulse here.